Alright, folks. Welcome to this week's first commentary and market review. Um, this is the dollar index, the weekly time frame. And last week, we were talking about the possibility that we see the dollar index establish the high time frame order flow once they trade inside this weekly fair value gap, right? And primarily last week we were in consolidation because there wasn't anything per se that the market was actually doing. And mind you, like I said when bias is bullish and market is making retracements, I like to qualify retracement as consolidations, okay? Because if it weren't consolidations, markets would just be very one-sided in the direction of the high different bias. So sometimes I like to see, or a lot of times I like to see this retracement as consolidations, because in a heavily one-sided market, we wouldn't be getting all of this kind of price action. You can see all of this price action for the past couple months since April. I mean, dollar index has been a mess, so that's why you have to be very very careful, especially when you're trying to engage the market. Earlier this week, we had, or I had, a couple guys, you know, tag me to their chat on Twitter, right? And I just offered my opinion about what I thought the market was going to do. And the key takeaway from all of those posts would be that you'd see the very essence for having these tools and this system, because like I always say, the change in the state in delivery on the 4 hour time frame, it validates the weekly bias. I think that's something I think some people are still finding it difficult to understand, because when it's there, it means the market are showing willingness to trade in the direction of that bias. Okay, so looking at current price action, I mean, if we look at the monthly time frame, we called DXY bullish. Not just that, we said the initial draw would be the fair value gap on the 3 months time frame, and you can see the markets actually traded into the gap. And that's why I said when we meet objective here, we're very likely to see the markets return back inside the range. Okay, and that's essentially what we're currently seeing markets do. So in a supposedly bullish order flow on the monthly time frame, you can see this month's candle is still bearish, so it means you haven't missed out on anything ideally yet, you get, because we will still see the market trade into equilibrium and trade inside this fair value gap here. There's still potentially lots of price movement, so we haven't seen anything. And if you think about it, just the same way I say the 4 hour time frame validates the weekly bias, what the 4 hour time frame does is that whenever there's a change in the state in delivery, what happens is that the daily candlesticks begin to print in the direction of that weekly bias. That's what the change in delivery does. It's basically market structure shift on the 4 hour time frame, you get, because I thought to myself that, okay, a shift in market structure, something like this, a shift in market structures, this candlestick traded below this low, so that's a market structure shift. This is the candle printing a lower low, so a shift in market structure against the high time frame bias is the torus. But a shift in market structure in line with the high time frame bias, well, that's a market structure shift. Okay, so that's the whole logic behind the change in the state in delivery, because once you can define the high time frame draw on liquidity, for example, or you can define the high time frame institutional order flow. I like to call them differently, because sometimes the draw isn't always the long-term bias of the market. Okay, it's just the market seeking to rebalance an inefficiency or something, you understand. And we now see the 4 hour time frame market structure shift via a change in delivery in the direction of that bias. Well, that's a trade. That's a signal that you can engage, or you can begin looking for setups in line with that bias. Okay. Now, like we said on the monthly time frame, we haven't seen anything yet bullish for DXY. All we have currently now is the market trade into the weekly time frame fair value gap, and you can see clearly the market didn't in fact close below this fair value gap. Assuming the market's close below the fair value gap, it means I don't know what, because I'm still going to hold on to my bias, but then it's going to be like it's going to be difficult to read price action. Even currently, it's actually difficult to read price action. So if you look at this gap, you can see this is the 50% of this fair value gap, and the market's closed above 50%. Well, that's showing some kind of willingness to want to expand, because if we're very heavily bearish, we could have seen the market just stay below this gap and inverted this gap, and would have a lot of talking points, and it's gonna be very, very stressful. So now we have this auto block here, this candle here. It's a bullish auto block, okay, and we have this gap, but we still have the market. You can see we have a short-term high here from here. Now mind you, I call this low resistance liquidated run, and but markets obviously are in consolidation, because if the markets were in consolidation, we could easily trade through here and here before the market returns back into the range. But we are obviously in consolidation, and if you check Euro USD, like which we saw it last week, you saw how the markets were trading efficiently on Euro USD, not leaving space for any sort of inefficiency. Even dollar index had inefficiency from this candle here, this gap. There was nothing like that in Euro USD because of the Euro pound. Of course, Euro pound has been bullish for a while now. Okay, so so now we have a lot of things to look at before we can, easily qualify long-term buys in dollar index, because this is the first week, and this is the second trading week in November, and we have 2 weeks left in November's trading. So ideally, what I want to see first is, how this week candle closes if we want to qualify long-term buys, because currently there's nothing giving us validation for longs on dollar index, except if this week starts trading and we can see something on the 4-hour time frame that validates our bullish buyers. Now mind you, we are still at the weekly fair value gap, please. Okay, we're still at the weekly fair value gap, which is key, because now that we're in the weekly fair value gap, and when this week starts trading, especially after Monday trades, would like to see what's going on in terms of market structure, okay, to see if there is any validity to be long on dollar index, or I don't know, maybe we're just going to remain on the sidelines, or maybe we switch gears, which I'm currently not interested in switching gears. Okay, I'm currently not interested in doing that. So I would rather just trade other markets. Okay, that's what I do in situations like this. When I find dollar index in consolidation, I just look through other markets. That's the whole point of having different markets. For me, I look at equities market, I look at commodities market, and I look at the yen. But basically, most of the time it's always hinged to the dollar index too. But sometimes I can take a bet if I think that okay, there's a lot of technical, what's the word? Maybe confirmation or validation I need, to take a trade on the yen. Okay, but normally when currency pairs are like this, especially the dollar index, I just look at other markets that are predisposed to go in one particular direction. Okay, so this is a weekly time frame. Like I said, we're still at K level, the weekly fair value gap. We trade a little bit into discount, or say we're trading into discount. We walked the auto block. We just want to see what the markets are gonna do. Okay, we have this consecutive downward candle. This was the consecutive downward candle I was talking about. I said as soon as the market trades here, we have those down close candles on dollar index. Or I think I have to switch internet now. Okay, hold on. All right, so the light went off, so the Starlink, oh, the light is back on. The Starlink went off, so I needed to switch to my mobile internet so I could continue this commentary. Um, so like I was saying, I was talking about this consecutive downward candle here, which is the auto block on daily time frame. I said as soon as the market trades into this 3-month fair value gap, we could see the markets return back here, and that was essentially what the market did on Tuesday. Okay, we had on Tuesday supposedly I was thinking they were gonna make it very easy because we had the run below the previous weekly low on Tuesday, and we have the markets trading very close, and they just trading into the rejection block and started to trade lower, and we had bearish dollar index for last week. Okay, and look at all of this price action. Even all of this price action is really not encouraging in currencies. And even now that we are at the weekly gap, we can see this level here, this low here, this I don't know, it's pretty even messy on the 4-hour time frame. So personally, I don't really know how dollar index wants to trade. I don't know if maybe they have interest. Let me take this one off. I don't know how maybe they have interest somewhere here, because this level here is kind of like it's clean. Okay, it's actually clean. So I don't know if there's any interest here. So, but what I do know is that we're currently on a weekly level, and it will always be the high time frame level that will take priority over all of those lower time frame market structure and price action, because countless amounts and number of times we'll see the markets leave clean levels. Okay, so that's why I don't really want to focus on that. I just want to focus how the weekly range is going to play out, the architecture basically of the weekly range. So we have this closing on Friday. Well, I don't know how the markets are going to play out. Well, we have this level here, this old fair value gap. Let's see if the markets can stay above this gap. I think if the markets can stay above this gap, I think that would be salient for a bullish price action. But if we're still within this gap and probably trading below it, well, I would just look away from dollar index and just keep on watching on the sidelines and trade other markets, of course. All right, and the reason why I can't always talk about other markets is because it takes a lot of time to cover lots of markets. Okay, and I just think if I can say this on dollar index, okay, and it's basically about the principles, okay, the thought process, and that's what you can just learn. That's what you're learning, my thought process, and then you can replicate it on other markets. Okay, you don't have to, I don't have to spoon feed like every singular market. It will just breed dependency, and once that is happening, it means you'll be looking for my validation for your analysis, and that's not the kind of educator I want to be. Okay, I prefer independent. Okay, I like independent thinkers, so that everyone can have their own opinion, trust in themselves, and they can just do things without needing the validation of the next person. Okay, so yeah, I was gonna say like and subscribe. I don't know. I should have said at the beginning, because when I said it the last time, I had a couple likes and it was very encouraging. So I should have said it a long time ago. But I don't know. I don't know this social media thing. Okay, so let's get back into it. So there's something I want to show, because there's really nothing for me to point out on dollar index. Absolutely nothing. Price action is a mess, and I'm not going to force anything because I'm trying to, make a call. Okay, if there's nothing, there's nothing. If there's something, I'll call it. Okay, it's as simple as that. You know, you don't have to be pressured to make a decision just because of you want to sound, you want to be smart and stuff like that. If there's nothing there, something that doesn't align with your system, because my analysis is based off of my own system too. Okay, and there are times I don't see anything. Okay, and I can't force it. Well, I can force it, and it's going to reflect on my P&L. I'm probably going to take a loss, and nobody likes losing, right? So this is a 3 months time frame on Euro USD, and you can see USD, we have a huge gap here, and I think with this candle closing within the range of this candle, okay, I think the name of the guy is Monday, the one who referenced CRT last week. Okay, I'm sure. Okay, you have your CRT here on the 3 months time frame on Euro USD. So this is the draw. Obviously, we want to see Euro USD trade into this monthly gap. And someone is thinking, oh, dollar get straight into this 3 months gap. Euro USD didn't. Yes, of course. Why? Well, if you recall relative strength analysis, look at Euro pound. Euro pound is bullish. Even if dollar index is bullish, Euro USD won't reflect as much bullishness as GU. Okay, so that's one of the things. This relative strength. It's Forex is there's a lot of moving parts and complications, and that's why I'm just giving you the keys to the kingdom. Okay, you know all of the theories, okay, and I'm teaching how you can implement those theories, right? And so we have this gap here. Market hasn't traded into this gap. I think Euro USD will trade into this gap. I think so. And on the monthly time frame, we just have euros returning inside last month's range. We already traded into the prior month's low, and we still haven't seen sponsorship. Okay, and on the weekly time frame, we have euro USD even walking inside this range. It's pretty insane. Okay, and of course we now have a swing low from here, just like we had a swing high from on the weekly time frame of dollar index. Okay, and we have the swing low from euro USD. And whenever I say swing low, ideally I want to see the market straight into the previous candle's high. Okay, and we have this level here. You can see this high and this one, you're very close, very close, very close. This is low resistance liquidity run. Okay, I don't know if there's any interest to take out buy side liquidity here, and possibly maybe that's the interest for euro USD before we see continuation. Let's have that here, but of course I would prioritize this one over this one because this is like low hanging objective. Okay, let's see if the markets would return into the previous weekly high and take out buy side liquidity here. Let me have this one on. Okay, is on daily and 4 time frame. So say the market trades into buy side, possibly trade inside buy side liquidity here, and we have a change in the state in delivery. Then that's something I'm going to actually put in consideration. I'm going to even take a trade if I see them run buy side liquidity here with a 4 time frame change in delivery. I'm definitely going to take on that trade and aim for sell side here. Okay, as per short term trade. We're getting to the end of the year, so I think I'm getting to that point where I'm not, it's holiday season. In fact, I'm keeping money for the December. All right, so it's holiday season, man, and I can't wait because I did a lot of work this year, and I'm actually looking forward to resting so I can come back fresh for January and all of the things we planned, including the Discord in January. Since the other time, I think I haven't seen any interest again for anyone who wants to join the Discord next year. What the Discord really is just a little bit more than this. Okay, I'll say more than this because we are having calls there, maybe twice in a day. I'm gonna fix the schedule to that, and we are gonna be looking at other markets. Setup isn't the catch, although will I share my trades there? Yes, of course. I will definitely share my trades and the logic behind and everything behind. It's just a private community where everyone is just sharing the stuff, and me personally, I'm leading the charge. Okay, because we have a new year next year, and everyone has plans. Everyone wants to do better, and want to lock in. And I think that place would be a great space if you're actually very interested in it. So we have this high here, and I'm thinking that markets could potentially trade here. And if this is the draw on liquidity, now mind you, don't forget this is a 3 month fair value gap. 1391. Okay, let's go 3 months. Okay, 1391. All right, so we are in sync. So if this is a draw of liquidity, ideally we don't want to see the market trade above this high because this is a market structure. Sorry, this is a market structure shift. All right, and a market structure shift against the draw on liquidity, that's a total soup. So that's why when markets trades here, I don't necessarily need the markets to trade above 2 prior weekly highs. Okay, if they can get through here and reject and all of this stuff, then we have interest for this gap here and sell side here. Now this is very funny because we wanted to see the markets return back into the range to make a continuation, and dollar index went to consolidation, and the markets went into consolidation. Euro pound is bullish, and we are now seeing relative strength on Euro USD. It's very messy. It's not ideal, okay, because now we had trades here and we collapsed here because of bias and markets here. It's very frustrating, but that's what the market is, especially if you're not trading based off of I don't know. I'll just drop that thought. So like Euro USD, you can see pound. Earlier this month, we said this was a propulsion candle. On the monthly time frame, you can see this body can this close below this candle. It's the change in the state in delivery, but it's also the propulsion block. Why is it a propulsion block? We have an up close candle trading inside another up close candle. Okay, so that's why it's a propulsion block. All right. So on the weekly time frame, you see the markets are currently at the propulsion candle. We have a swing low here. Potentially the markets could actually trade above this high, but euro pound is bullish. I don't know. I haven't actually really checked euro pound, like maybe on a weekly basis or what next week is going to do. But this is the weekly fair value gap. Unlike dollar index, GU hasn't even traded through until the consequent encroachment of this gap. It's relative strength happening, okay? And we're currently at the monthly propulsion block, and on the daily time frame, well, markets basically is just in consolidation, and reason being that dollar index is trading lower, euro pound is trading higher. Aside from days when we see GU exaggerate its daily candlestick, but look at the closing basis of these candlesticks. All right, so we're currently in consolidation, and I don't know if your GU has an interest here, but they are already at the monthly key level. Okay, all of these levels I see them, but I'm not going to hard press because it will always be the higher time frame level that takes priority over the lower, much lower time frame levels. Okay, I have a bias which is bearish for pound, and which is bearish for pound, but last week had a bullish candle closure. So we need this week to actually establish the monthly bias, because currently the monthly bias hasn't been established. We are just bearish on pound based off of market structure, high time frame, and all of those things. But this month's range, November's range, hasn't been established yet. So until we begin to see candlesticks on the weekly time frame for a start trade in the direction of the monthly bias, well, it's gonna be very difficult to just want to randomly just pick out trade, especially if you want to short-term trade, or you want to a swing trade. But if you want to day trade, obviously you can always trade the daily ranges, which can be bullish on some days, can be bearish on other days. Okay, like when prices trade into this gap here, this is an inversion fair value gap. You can see how this candle closed inside the range of this candle. So given that they were very likely to be bullish on this day, okay, on this day. So so that's just what it is. So we just need price action, really. There isn't anything in market structure to align. Okay, there isn't anything in market structure currently to align, and that's why I can't have press. There's nothing, except if I want to say, okay, I am bullish because this candle closed above this consecutive down close candle, and the draw is what's the draw when we just hit a monthly level. Okay, and I'm bearish on the high time frame, and the high time frame market structure is also bearish. So what am I trying to do? I'm trying to say the markets are going to trade here. No, I wouldn't do that. I'd rather not even just take any trades. I would just simply look at other markets, okay? And that's how it is. Just trying to build narrative and context, around my setups. Okay, if there isn't enough narrative or context, then there's no trade. That doesn't mean you can't build narrative and still not take a loss. Please, you can always take a loss. I mean, markets can trade below a high resistance, and that's a torso, meaning you can properly place your stop losses and the market still takes it out. It's markets. Obviously the only thing you can do is manage your risk and have mental resilience. I hope you found this one insightful. Until the next one, be safe.